I'm like, I think I found the Mexican Bill Gates. And I didn't have the fund. So I put in about 20K as an angel. And then when I did my first close, I wired him 150K. I put more in about 8 months later, another 150K. And today he's at 30 million in ARR. He has raised 25 million in equity, just closed his Series B. He has access to a $75 million debt facility, and he's never been to college. And every other VC saw him, and they all passed. Most of the money he's raised has come from the US and Brazil. But when I met Maito, I'm like, I think I can do something different here.
Ivan, welcome to the Slice Pod, where we uncover the stories of fresh emerging managers across the early stage venture landscape. You're the founder and general partner of Numundo Ventures, an early stage fund investing in pre-seed and seed across Latin America. Let's begin where we always do around here, which is by asking, how did we get to this point? Was this always the plan that you were going to start your own fund?
It's definitely not the plan. I was born in Colombia. I moved to the US when I was very young. My parents came from very large families. My mom was one of 11. My dad was the youngest of 5. So we're always going back and forth to Colombia. So growing up, I was always struck by just how life was very different there than in the US. I was there in 1989 when the leading presidential candidate was shot and killed. The next day we're heading to the airport, and it was just crazy. And the next 20 years were very difficult for Colombia. And that was a very motivating experience for me. Both of my parents were doctors. I was supposed to be a doctor, immigrant, living in the US. Basically, I should have been a doctor, a lawyer, an engineer, and nothing else. I told my mom that I would finish my pre-med requirements, but I wanted to learn something that maybe someday I could help Colombia. So I was at Harvard for my undergrad. I met one of the future presidents of Colombia in one of my seminars. End up not becoming a doctor, going to work at McKinsey, doing a project in Mexico City. This is back in 1993. But the situation was super violent. Even in Mexico City, they were kidnapping people. And so I thought my window to do something in Latin America shut, right? And I come out to Stanford for business school in 95. It's literally the beginning of the internet. So over the next 25 years, I work in various tech companies. I joke that I've seen the good, the bad, and the ugly of startups. I was employee 20 at a company that got sold for $1 billion. I've been at a startup that didn't make it and everything in between. And I wanted to be an angel investor around 2015, but I wasn't very inspired by the Bay Area. I didn't feel like I had an edge. We did a few trips to Latin America, and I was like, maybe I could help here. In 2019, I did my first angel investment, and then one thing led to another. I invested in about 30 companies. About 2 years ago, I began this fund, a small proof of concept fund. We'll go into all the nooks and crannies of how I invest, but this was a very organic thing. And for me, what's been very cool is it's been sort of like that window that I thought shut in the mid 90s. I thought I was going to do something top down, work in finance or in the government, because that was kind of the way we thought back then, how you could make an impact. And now it's the complete opposite. It's bottom up, founder at a time, and the window opened up again for me.
Do you remember the day, the time, the place where it clicked? There was the aha moment of like, it's going to be Numundo. This is the portfolio that I'm going to build?
I'd say there's 2 big moments in my journey as an early stage investor. The first one was the first investment. I invested in a startup called Pickup, which does ride hailing on motorcycles. It's very similar to Gojek and Grab in Southeast Asia. They were trying to do this in Latin America. I remember meeting the founder. They show me these numbers, and the first thing I asked is, who the gets on the back of a motorcycle to go somewhere? To me, that was such a foreign concept. And I had just been in Medellin, and he says, you remember when you were in Medellin? I'm like, yeah. First of all, the traffic was horrific. I'm like, yeah, it was pretty bad. And he's like, and all the poor people live up in the hills, right? They got to go to work downtown. And they can't afford an Uber. It would cost too much. If they get in the bus, it's cheaper, but they have to do all these stops. For the price of a bus, we can get them downtown in 20 minutes. They showed me their numbers. And it was like one of these moments where like, it's all focused on bottom of the pyramid, all that. And it was just unbelievable. So anyway, so I ended up investing about 25K. And I told them I would help them raise the round. I go to every VC I knew. And it was like pre-seed Colombia. This was before YC was really having a huge impact in the region with Rappi and other people. before SoftBank did their big investment in Rappi. It was very hard, but we ended up helping them raise 2 million. And the one that really defined the fund and got me motivated to start a fund was in 2021 in the fall. And I'm 55 now, or 54, I guess. I'm going to be 55 this year. And I lived through the dot-com boom and bust. And I remember that fall thinking, this is the closest it's felt to 1999 in a long time. I saw an announcement from a company in Mexico called Kavak, like the Carvana of Latin America. They raised around 8 billion. They're launching all these countries, and they launched in Turkey. And I'm like, what the hell is Kavak doing in Turkey? This is not going to end well. At that point, I was like, it's all about picking. I think, and this idea that growth at all costs. So I was kind of decided I'm going to launch this fund. I'm going to focus on business models that make sense and building relationships with founders before I invest. So at that point, I'm like, why don't I start with car finance? Because I met a bunch of founders doing something in car finance. And then I met this guy, Maidon Sandoval. He was 20 years old when I met him. He had the model that made a lot of sense. In the first 5 minutes, I knew there was something very different about Maidon. We worked together for 3 months. And by the time we got to the end of the 3 months, between January and March of 2022, I'm like, I think I found the Mexican Bill Gates. And I didn't have the fund. So I put in about 20K as an angel. And then when I did my first close, I wired him 150K. I put more in about 8 months later, another 150K. And today he's at 30 million in ARR. He has raised 25 million in equity, just closed his Series B. He has access to a $75 million debt facility, and he's never been to college. And every other VC saw him, and they all passed. Most of the money he's raised has come from the US and Brazil. But when I met Maidon, I'm like, I think I can do something different here.
I love that it started quite small. It was just a 20K check, truly an angel check. Why do you think people passed on him? You mentioned everybody's seen him. You were there in the middle of it. If you see them, chances are everyone else probably has access to them as well, right? Why do you think they didn't see what you saw? Why did it take them so much longer to catch up with what you were seeing? That, holy crap, this is the Bill Gates of Latin America.
There's a rational reason they passed. And hopefully we'll see in the long run one of the benefits of my model. There's bias in the system. So let's start off with the bias. I think that the VC market traditionally in Latin America, you look for a certain founder profile. And it makes sense why. Educated in the US, probably at a very top tier school, can speak English very well. And why did they do this? Because they know at some point they got to raise capital in the US if they hit scale. It's more or less worked, let's say, right? So if you look at David Velez, went to Stanford, goes back to Latin America, right? The Mercado Libre folks were all from the GSB class of 99, I believe. There's like a central casting. And if you don't fit, it's very hard to raise money. Maidon was the opposite of central casting, the absolute. I think the second thing is there's a flaw in a lot of VCs models, especially during the ZERP era. I mean, you will still see on websites that the VCs will say, we're going to give you an answer in a week or 2 weeks. In some markets, maybe that's what you got to do, but I don't believe that's Latin America. I don't think it's the right way to invest. And so I spent 3 months with Maidon. Maybe they take a meeting. Maybe not. They probably don't even meet with him. My model is different. I would love to build the benchmark capital of Latin America. The benchmark model is that the GPs do everything. They take the first meeting. They do this stuff. Who's likely to have met with Maidon? It's going to be the most junior person at a fund in Mexico. Then they have to think, will the partner be interested in this? No, Maidon hasn't been to college. And they don't spend time. They got to make a decision right away. I've worked with young people who've had tremendous success. He reminded me of this other founder who sold the company for $1 billion, started another one, took it public. And all I could think about was this guy reminds me of Sanjit. I don't think people in Latin America have that history, right, of seeing young, talented people do incredible things. So anyway, there are a lot of reasons, but part of it is my model and part of it is bias in the system.
Fund one was relatively small, $5 million fund. You've done 13 checks, I think.
Mm-hmm.
And as you mentioned, you're extremely hands-on. You spend quite a bit of time before you cut the check and after. What are some of the kind of lessons that you learned during your pre-institutionalized era, it's kind of like, doing angel investing that you brought into this first vehicle? And what are the things that are different deploying a $5 million fund relative to cutting like 25, 50K angel checks as an individual?
I just think now when I see something, I'm a much better judge of what's extraordinary versus what's not. But for sure, the hands-on model is very different. When I was investing 20K here, 15K there, 30K there, I was a price taker. I was really mostly focused on learning. How do I go through my evaluation process? When I first started working, I worked at McKinsey. The irony is a lot of the skills I'm using now are from 30 years ago. When you worked as a consultant, you're building trust because you can't do anything. It's all whether the client buys in, they have ownership. And guess what? It's like working with the founder. They got to trust you first. You got to build it. Then you're in a position when they make pivotal decisions and need your assistance. I would say the investment methodology is similar, but the process is very different. The patience is way higher.
And now you're thinking of doing fund two, which is going to be considerably larger because you want to graduate check size as a function of the sweat you're putting into these things and the desire to own a little bit more? Or is it price inflation? Even in LATAM, the best founders are getting ahead in terms of pricing and the check size has to adjust relative to ownership targets. What is between the two, or is it both?
I put in the same work either way. If I had, just for argument's sake, a $30 million fund, I would be doing the same work. And the founder would allow me to invest the amount of money that makes sense for the portfolio construction. I'm not limited, right? If you look at Maidon, if I could have written him a 500K check at inception, he would have gotten to work right away. He would have had a much cleaner cap table. We ended up having to clean it up afterwards because he gave some deals to other folks. And I did the same work. So there's leverage on my time. My model scales. The relationship that I form with these founders is very, very tight. I'll give you an example, a recent one. So Maidon was literally first investment of the fund. One of the more recent investments, I invested in an AI company started by a Colombian founder. It's called Dapta, and they do AI for small, medium businesses. I knew this founder for a year and a half before I invested. I met him in Palo Alto in the summer of 2020, and his initial direction for the company didn't make a lot of sense to me, but I loved, he was exactly my archetype of a founder, my ICP, right? Super clear thinker, got stuff done, learn it all, right? We would stay in touch. I give him feedback, and every time I met him, it's like a different person or he's iterated. I end up investing. I put in a 200K check out of cycle. He wasn't fundraising. We helped them on all these different go-to-market stuff, build the relationship. He moved to the US, lives in Phoenix. I go to Phoenix. We work on the pitch deck. He starts fundraising a few weeks ago. He's got 4 million committed for his round. He's done it in less than a month. For a Latin American founder, Colombian who nobody knows, didn't go to school here. I'm not at liberty to talk about the investors, but we have one of the iconic tech founders writing $1 million check into this round. The team at Excel has seen this. I've leveraged my whole network, and it's a $4 million seed round, and I'm not participating because my fund is small. I put in all my money in that first check. What I would have preferred to have done is written him $1 million check instead of 200K check and maybe be done with it. But either way, I could have easily, if I had a bigger fund, put in $1 million, no problem. I could have started this round. I think I have the capacity. And as we look at AI, I think there's going to be situations where if you can write that first 500K to $1 million check, it may go a very long way. I think I can help founders more with a bigger fund.
You've stated before publicly that LATAM looks like Silicon Valley in the 70s and China in the 2000s. In what regards exactly? Is it just pricing? Is it quality of founders, market opportunity, or all of the above?
I think there's two different comparisons there. So first I'll start with the Silicon Valley comparison. That comparison I'm making is more around the maturity of the ecosystem. If you look at Silicon Valley of the 70s, the very first venture-backed company, I don't know if it was Fairchild Semiconductor or right before it, but that was in the early 60s. Literally the first company. It grows. Then they split off. A bunch of them form Intel, but that was the very beginning. By the time you get to the 70s, by the time you get to Apple and Microsoft and some of these incredible companies that happened in the mid to late 70s, you'd had a 10 to 15 year period of the beginnings of people working at startups and having experience with that. If somebody had dropped in from New York, worked at Salomon Brothers or Goldman Sachs and lands in Palo Alto, they would say, this is a terrible asset class. It's tiny. You could probably count the exits on one hand. Okay, great. Fairchild went public or Intel went public, but who else? But at that very moment, you had Bill Gates, you had Steve Jobs, you had all these people doing all this great work. But the overall ecosystem got to a point of maturity where now you're entering this period where you're going to see all these opportunities. I think it's the same thing in Latin America. The Fairchild Semiconductor of Latin America arguably is Mercado Libre. I think when it really began was with Nubank. In the 2010 period, you started to have a generation of Kazakh and Monashis and other funds in Brazil started to invest in startups. And so now when we're at 2025, we're 15 years later. So it's not that different than Fairchild in 1962, and then you're at 1977. So we have a generation of product managers. If you started in Nubank, nobody had been a product manager, right? You have a generation of people who've worked at startups. You have a generation of people who now know what they're doing. We're at an inflection point in the same way that Silicon Valley was at an inflection point in the late 70s. Then the China comparison is just that I firmly believe technology can solve a lot of the biggest problems in Latin America. If you'd shown up in China in the year 2000, hundreds of millions, maybe billions, I don't know what the number is, of people living in subsistence farming, right? And 20 years later, you've had an industrial revolution that in other parts of the world took 100 years. They did it in 20, right? It's just a fundamentally different place. I'm optimistic, but I think between today, 2025 and 2045, technology is going to have an opportunity to radically improve the lives of millions of people in Latin America.
You're famous for spending a lot of time before the investment, a lot of time after the investment, but you live on the peninsula, and the majority of the founders you invest in operate in Latin America. You mentioned Brazil, Colombia, like it's a huge continent. We just said like billions of people, just like China coming out of that farming economy into an industrial economy, into hopefully a service economy. How do you split your time? How do you actually spend physical time with these people? Are you always on a plane and on the ground? And like, you know, when people say Latin, there is like hundreds of countries there. It's not just one giant thing. When people say Europe, there's several different cultures and subcultures within the different states as well. How do you spend physical time? How do you understand the cultural nuances? How do you get to relate to a VC in Brazil versus a founder in Mexico? What's the secret?
The marginal hour is massive. And it's almost like imprinting. The first person who believes in you, the first person who spends time early with you, then you're in a different situation no matter what. Maidon and I still meet. And his board is huge. I formally don't want to be on any boards, but I get invited to every board meeting, right? Because you're the first person, right? And that's kind of one of the hacks to the system. Being almost like a Series A investor at pre-seed is super differentiated. I travel a lot. So I'm probably once a month traveling somewhere in Latin America. Typically Mexico is where a big chunk of the first investments of Fund 1 are. I'm about to head next week. I'm going to Miami to speak at an event, flying from there to Mexico City, going to a board meeting, staying through the weekend, meetings with founders. And then just, literally like every day, WhatsApps, Zoom calls. And Zoom is unbelievable. If Zoom and YC didn't exist, I couldn't do what I do. Sometimes we talk about why now for companies. There's total why now for VCs too, I believe. And so for me, the fact that YC started to get really big and have a name in Latin America with Rappi and a bunch of other companies that were successful, then every Latin American founder wanted to get into YC. When they go to my LinkedIn and they're like, he lives in Menlo Park. He knows all these people. Well, I'll take this call from this gringo, who reached out cold via LinkedIn. Because of the pandemic, I didn't have to be in Bogota. I didn't have to be in Ciudad de Mexico. I didn't have to be in Santiago, Chile. This is a natural experience.
How do you approach due diligence this early, often remotely, across vastly different markets? It's all about people, but even when it is all about people, right? It's easier for your peer in California to be able to diligence folks because it's a very tight network. Here, you find a great founder and you cold DM them on LinkedIn. What are the chances that you have a lot of people that know each other very well, or people that have spent time with these folks?
So I will say something that's sacrilegious for an early stage investor. It's not all about the people. I had to have conviction on what they're building. As an operator, I've been on what I thought were great teams, founder market fit, everything. And we were pointed at a terrible market. There's a lot of survivorship bias in this business. We all know the pivots and just constant iterations. So we hear about those incredible stories. What we don't hear is the other 99 where they run into a brick wall and it's over. But then you're like, I would back that founder 10 times over. And that might be true, but you just lost a lot of money and time, right? There's a lot of risk in what we do. But typically, there's two things. One, I take time. On average, I'd say the fastest I've done it is a month. And that's usually in a situation where I know the founder well. Like, let's take somebody like Nico. I've literally been doing due diligence on him for a year and a half. All I need to do now is understand the business. Usually what I do is start with the business. If you're not solving a painful, urgent problem in a big market, I'm done. The first 2 or 3 meetings are just around that. If I don't feel convinced of this, or there's data, or they're getting initial signals of product market fit, then we don't continue. So the ones that continue are the ones where we've gotten conviction on the parts of the business. Because I spread this out over time, I can see how this person works. I can see how this person thinks. So I'm just getting way more data. Now, it doesn't mean that I'm not going to make a mistake. Ironically, this ecosystem is small. It's surprisingly small. When I'm starting to get, with Maidon, it's different. He was 20. I'm going to be the primary source of data on a 20-year-old, right? It's going to be the 3 months of us working together. For more experienced folks, at this point, I have a lot of people. I can share a story about this unbelievable company I invested in, of all places, in Venezuela, where you can see how the network comes into play. The number of people involved backing and supporting early stage founders in Latin America, this is why I go back to Silicon Valley of the 70s. In the 70s, you could probably put all the VCs in the restaurants on University Avenue in Palo Alto, and they would all know each other. And that's, I think, what it is, especially in Spanish-speaking Latin. The network is small. It's different than the Bay Area.
First, on the people part, you're right. A shitty team in a great market outperforms a great team in a shitty market any day. And on the competition, you get to spend a lot of time with them because you don't have a lot of competition around you. I think that there is competitive dynamics that happen in hot markets, whether that is like California or London. As soon as there is some heat on a founder, there is pressure on the investor to pull the trigger before they get cut off. You don't have that kind of pressure.
There is no doubt. That's why I started a fund. And why I had more conviction about starting the fund during the winter of 2022, 2023, because the institutional capital in Spanish-speaking LATAM, it basically is what I would call pre-Series A. So they wait until it all sorts itself out and try to get in right before maybe a U.S. investor or Series A. Where it's very challenging for founders in Latin America is at the very beginning and at Series B. Sort of like this barbell, right? I knew I couldn't raise a fund to help out on the Series B, but I knew I could help out at the beginning. And there isn't this competition. For me, the big thing I'm trying to do with this benchmark model is to build this brand. At the beginning, as a GP, it's on me. It's a personal brand. But I want to be where founders want me on the cap table regardless, right? Because I can do this on a fund one that's so small. If they could reserve 200K for me, it's all good. Or I could come in out of cycle because it's like a minimal percentage of ownership. It obviously changes with the bigger fund. I'm able to slip in, so to speak. There's just no competition. And I don't mean that in a pejorative way. As I get bigger, the founder will have to make trade-offs, and I can't just randomly show up and say, hey, here's $2 million. Will you take my money?
How have you changed, looking back at your first angel investment and your last check out of the first fund? Have you changed your approach? Did it change at all? Or is it just the check size that has gone up?
Oh, it's changed a ton. It's fundamentally different. Despite everything I just said about caring about the business, I definitely care about the founders, right? Before somebody would pass something along, I'd look at the pitch deck. And so I was very much like, okay, logically, does it make sense that something like this should exist in Latin America? Is it solving a problem? Like a single click investor? I don't know what you would call it, like a quintuple, sextuple click investor now. The level of due diligence that I do is an order of magnitude higher. There's an expression I use, it's kind of old school, motherhood and apple pie. Of course, why shouldn't this exist? I want to digitize X industry. Well, that makes sense. It's a huge industry. It should be digitized. Or I want to democratize. When people use these words, you're like, well, of course, who would disagree with that? I'm curious, why hasn't it digitized already? Why do you think you'll be able to change that? It's not that I'm opposed to some broad thesis that makes sense, but there are so many businesses that look great on PowerPoint that are not successful. And vice versa. I'm just a lot more curious than I was, way more curious.
You were talking about when Nubank came around, hiring a product manager was probably extremely hard. I've been there in Europe, extremely difficult to hire talent. One of the great advantages of California is the density of talent and the fact that we train very good McKinsey analysts, but we don't train very good product managers out of universities. Where do you think in the talent cycle LATAM is right now? And do you think there's still a bottleneck? How do we solve for that? Does it get in the way of that really great seed company graduating to a Series A company if they cannot find enough people to actually fuel that fire?
It's a tough question because I have two very different opinions on this point. One is factual. I was talking with an investor at Ribbit Capital. I do a lot of fintech, and part of my job is to build relationships with all the top fintech investors. So despite the fact that I'm writing 200K checks, my aspiration is that at some point, one of my companies needs to get a $20 million or $50 million check from Ribbit. So I spend a lot of time with downstream capital. And one of the investors at Ribbit said, one of the challenges we're having in Mexico versus Brazil is that in Brazil, there's a deeper pool of technical talent, right? So when our companies start to scale, they're just able to build product faster. Sometimes things slow down in Mexico. So in a macro sense, there can be bottlenecks. The counter argument to that is there's tremendous amount of technical talent in Argentina. There's a billionaire who lives in the Bay Area, Argentine, who started a company called Virus Dev, which is an outsourced software dev shop with strong technical talent in Argentina. But because of their economy, they earn very little, right? There are pools of tech talent, but no doubt, I'm sure there's bottlenecks. But the flip side is if you find product market fit, it's going to happen, right? That's number one. Especially at the early stages, it's the founder's job to figure out where to hire. It's not my value. My value add is coaching and supporting that founder's obsessive focus on finding product market fit. Because once you have pull, then there are a lot of creative ways for you to get resources.
What were some of the challenges transitioning from a retire exec, angel investor into a full-blown manager of a fund, the raising capital, all the administration related to the actual day-to-day working on the job, building a firm, not just the first fund? What were some of the expected or even the unexpected learnings over the last 3-4 years that you've been doing this from an institutional perspective?
First of all, raising capital has been a pain in the butt. It's hard because there were people like me who did the same thing I did 1 year before. Thank God I didn't start in 2021 because I would have been a terrible vintage. I would have been paying these very high prices. I think it would have been a much harder environment as an investor, but a much easier environment to raise capital. When I started raising capital, the NASDAQ was just starting to go down. People are feeling less wealthy. Like any founder, there's a little naivete. I probably underestimated how much of a sales job this is, right? Just meeting people over and over, not taking it personally that they're passing on essentially what is a pre-seed company. I think the third thing I underestimated was how much I'm a founder. I don't think I fully understood that when I began. At some point, I internalized that. The good news is I was doing things in parallel, building a brand. At some point, I had this mental model of I'm a pre-seed company trying to get to the seed stage, or let's call it Series A. Fund 2 is my Series A. So just like any founder that I work with, I got to prove it. I got to show I have some defensibility. I got to show I have product market fit with my founders. I got to show I can actually do this job well and make them money. I'm a solo GP, so that's got pluses and minuses, but the big plus is I'm the one who sets the priorities every day. I'm not managing a bunch of people. So in many ways, that's easier. I'm also doing a relatively smaller volume of transactions, so there's not as much overhead. If I was doing 50 investments for the fund, it would be very different. There's definitely a lot of admin. I wish I could spend more time meeting founders. The bigger thing is just not realizing the allocation of time meeting and supporting founders versus fundraising and doing other stuff. I didn't realize how much there would be in this other bucket. But it's all good. I wake up every morning super excited. Today I got to do a portfolio construction model for Fund 2. Let's go.
How can people get in touch with you? Let's say I'm a founder hearing this podcast about this unicorn angel investor that focuses on the kind of person that I am. What's the best way to reach out?
One is LinkedIn. So my own was a LinkedIn inbound that I responded because we have all the data. We can go back to when I got his LinkedIn message. I responded in the same minute. Now, I can't commit to that now because I get a lot more inbound, but LinkedIn for sure. Definitely connect. My email, Ivan, I-V-A-N, at numundoventures.com. It's that simple. And then if you go to the Numundo Ventures website, there's a form where you can, if you're a founder, fill it out and tell me about your company.
And lastly, what is one thing that we did not talk about today that you're going to walk away from this conversation and think like, damn it, I prepared a whole week to share this wisdom and Fabre didn't ask me about it?
My investing to almost like falling in love with something, right? There is this combination of analytical plus qualitative process that's involved, and it tends to take some time. And I agree with what you said. I think in a more competitive market where there's different dynamics, even when I model myself about benchmark, I'm sure there's times when benchmark moves really, really fast, right? But if you're going to execute the model that I'm doing, there has to be a huge bottom line. I realized a few weeks ago, I'm in the business of building trust with founders, with the content that I produce on LinkedIn and other places. When I get into a first meeting, they trust me a lot because I'm authentic. I come from where I come from. I'm in the business of trust with LPs, current and future, right? I'm in the business of trust with other co-investors, right? So despite AI and all this stuff, and maybe I'll be wrong in 10 years, well, I'll be robots doing these investing. But at the early stage, so much about this is trust, and trust takes time, and it's okay. There's going to be some great companies that will support, and you should take time as a founder to get to know your investors, and hopefully you get some people to really support you.
Yeah, very cool. Very interesting model. Very interesting opportunity space. I like how you articulate. Sometimes we take it for granted. We talk to a lot of emerging managers. The peer-to-peer, hands-on type of relationship of that first money, it's kind of taken for granted at this point in the North American market. I think you're 100% right. That's not the case in the rest of the world. We're still one cycle behind. I definitely remember being a founder myself, raising capital in Europe, like a lot more similar to what you're describing to Latin American today, where like, if you lack that badge, there is not even going to be a first meeting, let alone a check coming your way.
You've just listened to another episode of Slice Season 2. Thanks to Yvonne for joining us for a conversation and to Sahej for introducing us to Yvonne. If you're new around here, make sure to subscribe to our Substack not to miss any future episodes. And if you're not new around here, thanks for tuning in again, and we'll see you next time. Bye!